Thank you for joining us this Friday, the 27th of May. I'm Sophia, a market analyst with Bell Direct, and this is the weekly market update. Before we take a look at the market's performance this week, let's begin with some trading ideas. Citi have updated their recommendations on the major banks and have refined their variable rate mortgage discounting assumptions for 2022 to 2023 financial year estimate forecasts. Now, the broker rates ANZ as a buy with a price target of $30.75 and forecast dividend yields of 5.7 and 6.6% fully franked, while Bell Potter have a hold rating on ANZ with a $29 price target. Citi's rating on Bendigo and Adelaide Bank BEN is neutral and high risk. They have an $11 price target and forecast dividend yields of 5 and 5.8%. They're more optimistic on the Bank of Queensland BOQ, which has a buy rating and a $9.25 price target, and forecast dividend yields of 6.5 and 7.4%. On the other hand, Citi say Commonwealth Bank CBA is a sell, with a price target of $90.75 and forecast dividend yields of 3.6 and 4.3%. The broker has a neutral rating on NAB. Its price target is $32.25 and a dividend forecast of 4.7 and 5.5%. In contrast, Bell Potter have a buy rating on NAB with a target price of $31.72. Meanwhile, Westpac is a Citi buy stock with a $29 price target and forecast dividend yields of 5.2 and 6.5%, while Bell Potter say WBC is a hold and have a $25 price target. So there are Citi's latest recommendations on the major banks for your consideration. Moving on to the market's performance this week so far, the ASX 200 is down 0.56% Monday to Thursday, with only the materials and financial sectors managing to lift higher. Leading the market this week is machine learning and artificial intelligence company Appen, APX. Its share price has advanced 23% week to date and 29% in Thursday's session alone, following news of a takeover proposal by TELUS for $1.2 billion. However, hours later, TELUS withdrew its offer without comment, so APX is expected to fall today. And the worst performing stocks this week so far were Block, SQ2, Polynovo, PNV, and Chalice Mining, CHN. The most traded stocks by Bell Direct clients this week were Sigma Healthcare, Nufarm, Insurance Australia Group, Lake Resources, Brickworks, Westpac, and CSL. Clients also bought into BHP while took profits from Grand Resources and Galileo Mining. The most traded ETFs this week were the BetaShares US Equity Strong Bear Hedge Fund, the Vanguard Australian Shares Index ETF, the BetaShares Geared Australian Equity Hedge Fund, and the BetaShares Asia Technology Tigers ETF. And lastly, economic data to look out for next week. On Wednesday, the S&P Global Manufacturing PMI for May will be released. This is the Purchasing Managers Index, which we talked about last week, that exemplifies the direction of economic trends in the manufacturing industry. This week, the forward-looking flash PMI was released, which eased to 55.3% in May, and a reading above 50 is an expansion from the month prior. This marked the 24th successive month in which conditions have strengthened. However, manufacturing production pulled back following the New South Wales and Queensland floods, as well as COVID-related labour and supply shortages that had an impact on supply chains. On Wednesday, we'll also receive an update on GDP growth rate for Q1. So last quarter, GDP was boosted by a rebound in household spending after the COVID lockdowns lifted. On Thursday, balance of trade data for April will be released, which will identify Australia's trade surplus. And on Friday, the final PMI for the services sector will be released. The services flash PMI this week saw the index fall to 53 in May. And that's all we have time for this week. I'm Sophia with Bell Direct. Have a great day and happy trading.